My name is Chris Munns. I am one of Hampton's state representatives. Thank you all for coming. If you're not from Hampton, welcome to Hampton. I wanted to just give you some background on why we're here today. I live about a half mile as the crow flies from the ocean. And this year, I'm sure most of you, it's the same with most of you as it is with me, that you don't pay any attention to your homeowner's insurance. I mean, you have an agent get you the insurance, and then it renews every year, and it's kind of par for the course. Our insurance was handled by a longtime friend of my wife who got the policy for us, and every year we just assume she's going to renew it for us, and we pay the bill. This year, for the first time, she called us and said, having a problem, can't get you any insurance. And I said, why? What's going on? She said, well, you live in an area where the insurance company is concerned about damages from storms. And I said, what do you mean, flood insurance? I don't live in a flood zone. No, it has nothing to do with flood insurance. You just, you're in an area that the insurance company is concerned about. Making a long story short, she was able to finally get me some insurance, and the cost was not that much different than what we were paying before. There was one little surprise that we received that was new. In addition to the standard deductible that we have of about $1,000, they made as a condition of renewal imposing an additional deductible equal to 2% of the value of the house in the event that there was storm damage, which would be a pretty significant number in my case. But we have our homeowners insurance. We're good. Having gone through that process, though, I was wondering how many other people in Hampton might have the same issue or might be encountering the same issue. So that's when I used the two important words in front of my name, state representative, to contact the Commissioner of Insurance. It's amazing what happens when you use those two words. You actually get an answer. The commissioner was got back to me very quickly, explained what was going on. We scheduled a conference call, we talked about it, and as a result of that call, he agreed to set up this meeting, he and his team are here tonight to give a little overview of what's going on and answer any questions that you have. So without further ado, I want to introduce you to the Commissioner of the Department of Insurance, DJ Betancourt.
Well, good evening, everybody. Thank you so much. I want to thank Representative Munn. He is the inspiration for this evening's event. I've talked a lot about the issue that I know we're going to focus on this evening, but it was his really bright idea to have a community forum of this kind. And so really do appreciate that inspiration and for doing the legwork to get the beautiful facility tonight and getting the word out. This is great. I want to also recognize Senator Alshiller's here as well. As a former legislator in long-term recovery, I am always a bit loath to name specific legislators because there are a lot of you. So if I've missed anybody, I apologize. But I've had the pleasure of working with those two in particular as colleagues, and so I did want to recognize their attendance here tonight as well. Also want to recognize that, which may also be fairly obvious, I have a bit of a cold. I've done a bit of traveling for work the past 2 weeks, and when you hang around airports and on airplanes too long, you get germs. And so I've got a little bit of a cold. Nothing to worry about. That's the bad news for me. The good news for you is that I've got a cold, and brevity is not typically identified as something as a strong suit for me. So the cold may help tighten me up a bit here tonight. I also want to say, too, that it is always wonderful to be here in Hampton. I am a Salem boy through and through. I've grown up in Salem my whole life, but my family has had a home here in Salem right on Kings Highway for 30 years. And so I consider Hampton to be kind of a second home. And it's a great community. When you go into your gymnasium here, you may notice a banner, a state championship banner for the baseball team from 1999. My father was the coach of that team, head coach of that team. So really fond memories of this community. So when the representative said, let's get some folks together in Hampton, I said, I'm in. Absolutely, I'm in. I never, ever leave home without my brain. And so I want to just take a moment to introduce a couple of members of my staff who are here tonight. They're going to do some of the presentation and then help to answer your questions as well. First is our Deputy Commissioner, Keith Nyan. Christian Citarella is our actuary in our property and casualty division. He's definitely a guy you're going to want to get to know. He's odd for an actuary in that he's really smart. He's an actuary, and he also has a really good personality. Emily Doherty here is the chief counsel for our property and casualty division. Does amazing work for us, keeps us out of trouble, but also does a great job on the legislative front. A tremendous resource for the department as well. And then the two who don't need any ego stroking, Andrew Demers and AJ Kierstead, they do our comms and outreach. I tease them, but they obviously do great work to coordinate with individuals who are setting up events like this. So, so before I start, I do at the outset have just one favor to ask you. Anything you hear tonight, and I'm going to cover a couple of different topics very, very briefly, and then we'll get into the issue at hand. Any topics or bits of information that you get this evening, take them with you and share them with your friends, neighbors, family, whomever. One of the things that I always start these presentations out with is a bit of an overview of what we do, who we are, and what we do. I joined the insurance department in January of 2021. I came over initially as the deputy commissioner, and I will never forget the first day I'm sitting in my office. I overhear a fairly animated conversation going on just outside my door, and my executive assistant is on the phone with this constituent who is just apoplectic with confusion as to why he can't purchase a homeowner's policy from us. The gentleman did not realize we are not an insurance company. We are the insurance regulator. We're in charge of applying and enforcing the laws and rules of the state of New Hampshire as they pertain to insurance on the industry. And so I took away from that experience very, very early on that we had a little bit of work to do with our branding and with our messaging and outreach. And so we've worked really hard. And again, tonight is a natural outgrowth of that effort. But please, if you would, help us carry forward that message, because at the end of the day, at the core of our department's mission is consumer protection. And we are not fulfilling our full potential and obligation to the people of this state if they don't know that we exist. We simply cannot help the consumer that does not know that we are here to help them. So that's my favor at the outset, if you wouldn't mind. So very, very briefly, department overview. Again, we are the insurance regulator here in New Hampshire. We're in charge of enforcing the laws and the rules of the state. We do that in a number of different ways. Again, all centered around the core mission of consumer protection. I could go on for an hour about everything the department does. I will highlight two, I think, of the core units within the department that I think are pertinent for the discussion tonight. The first is our consumer division. These are 7 individuals in our department who all day, every day that they are with us, are taking in complaints, taking in inquiries from consumers, helping them understand what is going on in their policy, helping them understand what it is they're encountering. We get approximately, and Keith has the exact numbers, I always estimate, we get approximately 6,000 calls every year that come into the department. One of my personal goals as commissioner is by the time I leave, I want to get that up to 10,000 calls a year, because that means that people know we're here and they know that we're a resource to help them. So we get about 6,000 calls that come into our department. Of those calls, all but 500 of them are simply from constituents who have a question. They're confused about some term in their policy. Why am I getting this letter? What does this mean for me? A lot of the frequent ones we get are, what is actual cash value? Whenever you get that question, you know somebody's wrecked their car. The one that kind of sends a chill down your spine is, what does it mean that there's that this is an exception, an exclusion? Oh boy. Whenever you hear the exclusion word, you know it's probably not going to be a great conversation, because whatever has happened to that individual doesn't sound like it's going to be covered in the policy. And so we're going to have to figure out a different way to see if we can help them. So we're an information resource. We're there to help educate the public, and we do so with great enthusiasm and pride. The other 500 calls do turn into formal complaints against an insurance company, their insurance carrier, and our team looks into that very, very aggressively. And we advocate for the consumer. We try to get the most appropriate outcome for that consumer. Last fiscal year, the legislators among us will know exactly what that means. In the last fiscal year, we recovered over $6 million for New Hampshire consumers, which was a record for our department. Very, very proud of that. And again, we have hopes that that's going to continue to increase over the years as more people know that we're here to be their advocate. So that's the consumer division. Our property and casualty division, so we have got two major divisions within our department that focus on the lines of insurance themselves. So the first is our life and health division. That's a whole separate 2-hour forum for later. The other is our property and casualty division. Predominantly, and again, not exhaustively, but predominantly, the members of that team deal with the homeowners and the auto insurance, amongst other lines of insurance as well. But those are the two prominent ones I think we hear most about from consumers. And they'll do everything from making sure that the forms that you are receiving from your carrier are in compliance with the law. Christian makes sure that the rates that the carriers are submitting are actuarially sound. They're not trying to undercut the market. They're not being discriminatory or anything of that nature. And he'll work very closely with our financial regulation unit that is focused on ensuring that the insurance companies are solvent. Solvency is obviously a pretty big deal. If an insurance company goes bankrupt, that tends to inhibit their ability to pay out claims. We don't want insurance companies to go bankrupt. And our team has done a phenomenal job over the years such that we have not had a domestic insurance company in New Hampshire go bankrupt since the early 90s, which is really great. Now, granted, when they do go bankrupt, it takes forever to run these companies off and eventually close the thing up. The one from the early 90s, we're still running off today. So you want to avoid that for a multitude of reasons, and our team does a great job of that. And then our market conduct unit. So people think that the worst thing that we can do as the insurance department is to fine an insurance company. Not exactly accurate. The worst thing we can do to an insurance company is put them through a market conduct exam. And you'll see that one unit kind of dovetails very, very well with the other. So our consumer division will start to hear from a lot of consumers that there's a concern or there's seemingly a violation of the law. Mind you, it also helps us to know what we need to talk about in terms of raising public awareness. Again, tonight's event is the result of the calls that we received from our consumer division, alerting us to the fact that this is something that our citizens are really struggling through and that we need to get aggressive in how we talk about this and the information that we distribute. But in any event, our consumer division will take in these complaints and they'll say, we're seeing a trend here that X, Y, or Z company keeps doing this thing that is in violation of state law. And our market conduct team will say, okay, we're going to go in and we're going to conduct an exam. And what that looks like is our team will embed themselves inside of that insurance company, and we bill them for the pleasure of doing so, and that can get very expensive. And we will go through X number of files, sometimes it's a couple hundred, sometimes it's a couple thousand, to get to the root of what it is we're looking for. And then at the end of all that, once we've identified all the ways that they're not following state law, then we will fine them. So the market conduct exam really is the big bazooka in terms of the tools that we have in our regulatory toolbox to ensure compliance with the law here in New Hampshire. So that, again, is a little bit of an overview of the two core divisions that deal with the topic that we're going to talk about tonight. So I'm going to start broad and then narrow in. So the overall state of the property and casualty insurance market is currently going through what we call a hard market. Some of you may be familiar with insurance more than others. Hard market essentially is the demand for particular lines of insurance, for particular insurance coverages, is at traditional levels or higher, but the access to that coverage is more narrow. And so when that happens, you have basic supply and demand dynamics set in, which is to say that because the access to those coverages is now more narrow, it's now more expensive for the consumer. So we are in a hard market right now. Why is that the case? Why are we currently in a hard market? This is a very unique hard market. And the question I'm asked all the time is, well, when will the market soften? To which I say, it's the same deal when you turn on a couple of different television stations at night and watch the weather. It depends on who you're watching, the opinion that you'll get. My view is this should start to get somewhat better in the next year and a half to 2 years. But again, that's kind of a consensus that I've seen from a number of different people. Who knows if we're right or wrong, but it should start to get better in the next year and a half to 2 years. The reason it is so difficult to say with confidence when the market will start to soften is because, as I've said, this is a very unique hard market in the sense that you have a confluence of very unique factors coming together at the same time in a way that we've not experienced before. Some of those key factors are things like there are still inflationary pressures in our economy. The supply chain, while certainly better than what it was during the pandemic, is still not back to pre-pandemic conditions, particularly in Europe and Asia, which has a huge impact if you need a car part. It's really hard to get sometimes, and you're sitting in that rental for a lot longer than you thought you were going to be. Interest rates factor into that. The cost of reinsurance, and again, we could do a whole seminar on reinsurance. Those are the companies that sit above the insurance companies and provide them with a backstop should they experience huge losses. They'll step in to cover the overage there and keep that company financially where it needs to be, not only to maintain solvency, but to make sure that premiums are staying reasonable for consumers. And then there's the trickiest one of all, and that is the weather factor. So I always preface this by saying, this is not in any way a political debate over climate change. You can believe what you want to believe about the origins of climate change, what to do about it. That's a discussion for a different day. That's not my lane. Those are for our legislators, our members of Congress and Senate, presidents, prime ministers, presidents of other countries. They'll deal with those policy issues. What I am here to tell you, though, is without any question, and I will show you whatever data you need to see to appreciate that I'm not making this up. The reality of it is the number of catastrophic weather events and the severity of those weather events is greater today than it has been in the past. Those are just the facts. Again, you can have a debate as to why that is or what should be done about it. But for my purpose, we have to factor that in how we do our jobs as insurance regulators, both in terms of ensuring that the companies have the adequate reserves to pay out claims, to make sure that they're not going bankrupt. But in terms of the discussion tonight, what that means for the consumer, what that means for all of you, and the coverages that are going to be available to you, and the affordability of that coverage. It's critically important. And so, as I've said, these factors are all kind of coming together in a very unique way to create a very unique hard market. Now look, some things will obviously get better. Inflation will calm down. Interest rates will adjust. Uh-oh, I don't know about the lights though. The supply chain will go back to whatever it's going to be, whatever the new normal is going to be. Those factors will eventually abate. What will not abate is this weather issue. We're going to have to deal with that for the long term. The other thing we're going to have to deal with is the fact that the price of technology, whether in our homes or in our vehicles, is here to stay. Nobody wants to go back to the days of the Model T or the Fred Flintstone mobile. We like new tech in our car. I'm cheap. I've been driving around all summer with no air conditioning in my car because I don't want to fix it. But my wife has a car that gives her a back massage as she's going down the road. We all have our preferences. But that technology, and I make a joke there, but let's be honest and let's be serious. The vast majority of the tech that now goes into vehicles and into homes is all safety oriented. And of course, we support that. We want to ensure that the individuals driving that vehicle, the individual living in that home, is as safe as they possibly can be. But again, that new technology is expensive. And so when that tech breaks, it's more expensive to repair or replace it. So that price pressure is going to be something that's here to stay as well. So again, I can't control the weather. None of us individually can control really any of those factors that I've mentioned in and of ourselves. So we're thinking very carefully as a department about what we can do to help consumers navigate this very, very difficult market. And obviously, you folks here on the Seacoast have a particular challenge in the sense that companies, because of this hard market, because of the fact they've got to maintain certain reserves, because the value of homes is going up, they're trying to manage their risk exposure. And so they're doing some things that would make sense. They are tinkering with their underwriting criterias. Premiums are going up. They are doing things, and I actually think this was Representative Munn's issue, they're doing named storm deductibles, all within the parameters of the law. What we're becoming aware of, however, and what is not going to be acceptable, is the idea that they're just not going to write your property because you happen to live along Hampton Beach or because you happen to live along the Atlantic Ocean. That is not in compliance with state law. Insurance companies cannot refuse to write a property based purely on location. They can factor in a whole host of other factors in terms of the underwriting. We review those underwriting criteria to make sure they're not discriminatory, to make sure that they are appropriate. But they can factor in any number of different things. Cannot just not write based on location. And it's gotten to the point now where I'm deeply concerned that in practical practice, some companies are doing that. And so from our perspective, what we're working on right now is I got the Independent Agents Association, and Joan Peugeot is the president of that association here in New Hampshire, and she's gracious enough to join us tonight, together with the head lobbyist for the insurance industry. And Joan is wonderful. I would never be firm or mean to Joan. But essentially I said, I'm locking the two of you in a room and you're not coming out until you come to an agreement as to how we stop this. Because if you don't, then I will do it myself. and neither of you may like how I'm going to do it. So work together. And we are very, very close. What we're going to do is ultimately to issue a bulletin. A bulletin is a regulatory tool that I have as commissioner that says, this is the statute, this is the state law, and understand that this is how my department is going to enforce that law. It's basically additional instruction that carries with it quasi-force of law because it is tethered to that state statute, to that law that's been passed by our legislature and signed by our governor at some point. So we're going to knock off some of the more ridiculous behavior that we're seeing. The other thing that we're going to do, and I've already talked to Representative Munn about this, and Senator, I'll bend your ear on this before you go. We're going to try to create a risk mitigation program for consumers, and we're going to have that discussion with the legislature next year. The goal of this is to take some of the fees that we currently collect, so we won't be adding any new additional taxes or fees. Our legislature does not like that. We're going to take some of the revenue that we're taking in right now, and we're going to try to put that in a separate fund. And what we will do is to create a grant opportunity for consumers to apply for some funding from that fund to put towards improving their home in some way that is going to benefit them in the underwriting process. Now, we're going to design this program to New Hampshire-specific challenges. The state of Alabama was actually the first state that did this. It was brilliant. But the weather issues that they have in Alabama are obviously different than what we have here in New Hampshire. Alabama's got to worry about those horrific hurricanes. If California were to set up a similar program, they'd have to deal with wildfires. New Hampshire, ours are the occasional, but when they happen, incredibly awful flooding, and the winter storm that involves ice and power lines coming down and branches and trees coming down, knocking into homes, knocking into cars, stuff like that. So our program will be designed to address those issues. And again, the goal is that if you take that money and you improve your home for whatever the criteria is, when you come up for renewal for your homeowner's insurance, again, you're going to be in a better position from an underwriting standpoint to be able to get a better premium. So those are the initial steps that we're taking. We're not just going to sit around and say, yeah, no, this is awful. We feel your pain, thoughts and prayers, that type of thing. We're going to figure out how we can be in a positive force for change for consumers with the resources and the ideas that we have. We're very fortunate. We are members of the National Association of Insurance Commissioners. It's an association of all the insurance commissioners across the 50 states and however many U.S. territories we have. We come together 6 times a year and we pool ideas. And imitation, as they say, is the highest form of flattery. Alabama came up with a great mitigation program. We're going to steal it. R&D, rip off and duplicate. So we're going to take that, and like I said, we're going to make it work as best as it can for New Hampshire. And we're going to leverage that, hopefully, to the benefit of the consumer. The last thing I'll say, and then I'm going to turn it over to Christian and Keith. This is the tough news of the night here. People think that I have a lot more power than I actually do. I don't have the ability to disallow a company's rate, the premium that they submit, just because I don't like it. Trust me, if I did, there'd be a lot of rates being filed, a lot of new rates being filed. I don't have that authority. Christian will take you through a little bit of that process. His analysis involves 2 factors. Is it discriminatory? And is the rate adequate? Because what we don't want to see is a company entering into the market and saying, you know how we're going to get a whole bunch of market share? We're just going to undercut that market. We're going to find out what the average premium is for this coverage, and we're going to half that. Well, the problem, of course, is that financially speaking, you can't sustain that. You're either going to go bankrupt or you're going to have to massively increase your premiums in the next couple of years. And so essentially at that point, you've baited and switched the consumer. So we don't allow that. Now, that's not to say that Christian and I don't have some pretty direct conversations with some of these companies about the rates that they submit. We tell them sometimes, does that really make sense? Would you want to see that rate on the front page of the Union Leader or leading the news on WMUR? And they'll make adjustments. But other than my ability to shame them, I don't have the legal authority, unfortunately, to just disallow rates because I don't like them. Sorry. I wish I had that power. But I'm sure there are good reasons the legislature didn't give it to us. So with that being said, hopefully that was somewhat helpful in terms of background of the department, background of what's going on in the market, a little bit of an understanding of what you're experiencing, and a little bit of what we're doing in reaction to it. So I'll turn it over to Christian and Keith, and then we're going to take your questions.
Thank you, Commissioner Betancourt. As mentioned, my name is Christian Citarella. I'm the Chief Property and Casualty Actuary at the New Hampshire Insurance Department. And what I wanted to do was kind of give a little more detail, a little more in-depth as to specifically on the homeowners market and what some of the drivers are as to why you're seeing significant rate increases and premium increases over the last couple of years. As the Commissioner mentioned, there has been, I'll step back. I started at the department about 10 years ago. In fact, it'll be 10 years this October. And when I started, for like the first 4 or 5 years, it was a very good gig. I mean, things were very smooth. I mean, there was very little, again, I see all of the rate changes, any request for an increase or decrease, and we used to see decreases, we don't see decreases anymore. We used to see decreases in rating and adjustments to rating factors and different characteristics for rating for all lines of property and casualty business, everything from, commercial liability insurance, general liability, professional liability, medical malpractice, all the way to homeowners and auto insurance. And for the first 5 or 6 years, everything was running very, very smoothly. And if you remember back, now this was again 2014, 15, 16, what did we see when it came to housing market? What did we see when it came to inflation, availability of products, and the like? Things were pretty stable. Inflation was less than 2%. And in some sectors, you didn't see inflation at all, right? And then COVID came around. And at that point, there was a bit, at least on the auto side of things, for a quarter, for 3 months, no one drove anywhere, right? So premiums actually came down. Many carriers would reimburse customers, right? Because they had all this cash on hand, right? And then the economy went kind of berserk, right? So we had, as the Commissioner mentioned, we had supply chain complications and gridlock there. We saw inflation like we had never seen for 50 years, right? And this affects all industries. When it comes to insurance, especially on the property and casualty side, there's a bit of a lag, because the way insurance companies adjust their rates, understand and recognize the premium that they need, they can't apply premium until renewal, right? And so there is a delay. They develop their premium. They come to me with evidence to suggest or justify their rate changes by the experience that they're seeing, by the claims that they're paying out. And so, take auto insurance, for example. They need to see 6, 9, 12 months of increased expenses on their part to fix cars. Delays, and when you have delays because they're having trouble getting cars into and get fixed because parts are delayed because of overseas, as the Commissioner mentioned. And then, there's extended time that the claimant has to drive a rental car. So that costs money to the insurance company. And all of this takes time for the insurance company to see it, right? So the point of that, one of the points of that story is that now we're starting to see inflation rates come down, right? Inflation now is approximately 3%, where a year ago it was 8%, right? But we're still seeing the effect of that on some of our insurance rates, because insurance companies are still seeing that. And it's going to take some time for that to kind of cool down. I want to talk specifically about homeowners, because that one is it's a bit frustrating. I know it's a lot more frustrating for you all than it is for me, but I wish I had better news at this point in the cycle. I am starting to see very slight positive indications on the auto side that rates are starting to stabilize. I will not say anything's coming down anytime soon, but where 18 months ago I was regularly seeing 20%, 25% increases on the auto side, now I'm back down to seeing high single digits, 7%, 8% increases on auto. Things are starting to ease up. In the recent past, again, 2 years ago, and then again, a year ago, I would see insurance companies apply for rate changes, apply for increases multiple times in a year. So they would apply, in June for an effective date at the, September 1, and then they come back to me again in November and say we need another rate increase in January. That's not happening nearly as much, and companies are waiting to go for that second rate increase. So on the auto side, things are just starting to improve. Homeowners is it appears much more stubborn, and there are many factors that are underlying that. I'm hearing a lot of concern from carriers when they provide their rates and the justification behind it. So just to give some numbers, we have, in 2024, we've had 51 companies that I've approved rate increases for. And last year, for the whole year in 2023, there were 73 companies that had done it in the 12-month span. Right now, we're looking at, again, some of these have not gone into effect yet, so we're about 3/4 to, 8 months to 9 months of the year has been accounted for. And so we're still at the numbers, 75, 80, we're going to have 75 or 80 companies, again, that are applying for rate increases. And these rate increases, weighted by premium, the average is around 13%, which is a little bit of an uptick from last year. I'm very sorry for that news. But again, the homeowners market just seems to be quite stubborn. Drivers continue to be loss costs. Materials and labor to repair homes. Now, these are not homes that are a total loss. The total loss is going to be the coverage A amount. It's going to be the amount of your insurance. You're going to get that check. What happens is that those losses that don't completely wipe out the home are more expensive than what they used to be. And so that insurance carriers have to take that into account when setting rates going forward. And it's not only is it the cost, but it's also the frequency of these losses. A little bit of that comes from what the commissioner was talking about these storms. Yes, one of the stats I saw recently when it comes to catastrophes, these are all types of catastrophes across the country. Again, fire, tornadoes, straight line winds, hurricanes, of course, flooding. It used to be 10 years ago, it was something like 60, 70 days in between between catastrophes. Now we're down to 12 days on average in between catastrophes in the United States. And obviously they're not hitting New Hampshire. But as the commissioner mentioned, insurance is a shared risk. There is subsidization that goes on. And a lot of this has to do with in the form of the reinsurance. Those reinsurance costs that are taken on by the insurance company do need to be passed on to the policyholder. It's not a huge cost. I wouldn't consider it to be the primary driver. Again, the actual cost of the insurance company is, it does drive these things, but it does play a role. Plus, an insurance company is a company. They have to pay their adjusters. They have to pay their staffs. They have offices, so they have overhead too. And in an economic environment where things are more expensive, it's going to be more expensive for the insurance company too. And by no means am I trying to defend the insurance companies, but some of what they're talking about is real. Part of my job is to recognize what is the real part from what is hey, we'd really like a little more buffer here. And we have some difficult conversations, as the commissioner mentioned, and we go back and forth, and I do press them on some of the justification and exhibits that they provide. But in the end, there is a justification for these rate increases. Just as kind of as a perspective, what I would consider kind of like normal, if we were to get back to a normal, when I look 10 years back, 10 years ago, we were looking at an insurance company putting in a rate adjustment of somewhere between 0 and 4%, due to the cost of, losses and overhead and wages and whatnot. And so at this point, we're looking at 13%. Over 10% a year. It's very much unusual times. To be sure, economic forces play an outside influence on homeowners' loss costs. The other thing that's happening too is the value of homes. And homes are getting bigger. Homes are getting, I don't know how to say it, fancier. When we have, the commissioner was talking about technology in our cars. We have technology in our homes where we have our smart refrigerator and we have our heating system that's attached to our phone and whatnot. All of that is also included in the cost that is being insured. And so that is playing a role as well, because you're insuring more value. And so that's gonna put pressure on premiums that isn't involved in rates. It's what's being insured. So those are some of the underlying concerns or issues or ingredients that go into our current situation. I wish I had better news. We are looking out to the future. I'm in constant communication with my counterparts in all 56 different jurisdictions, and I can tell you, I know it doesn't help, but New Hampshire's actually doing a little bit better than most parts of the country. We have a very strong competitive market in New Hampshire, something about 120 or so different carriers in the state that belong to, in one way or another, to about 60, 65 different insurance groups. There is still capacity. I do encourage you, and we're constantly talking, and I'm sure the Deputy Commissioner Nayad will mention this, we encourage you to shop around, talk to your agents, just go on the web, go to different insurance companies. If an insurance company is advertising on TV, go ask them, hey, what would it cost to insure my home? The quotes are for free, and you're not obligated to buy anything. If it was you can come on up, Keith. I'm going to hand it off, but in some ways, it's like buying a car, buying a television. Ask around. Is there something that I haven't mentioned that you wanted me to say, or we were going to talk a little bit about flood, right? And were you prepared to talk about flood?
I'll do my best to cover flood.
Go for it.
Jump in.
Yeah.
I want to make sure we have time for questions.
Sure, please do.
Thank you very much, Christian. So that's actually a really good segue. Obviously, we're talking about homes here on the Seacoast area, and Christian's outlined a plethora of risks that frankly, your insurance company is dealing with that get passed on to you in the form of premiums. So the question that we receive very frequently in the Consumer Services Division is, what can I do? How can I help mitigate those risks to keep my costs down? So The commissioner mentioned a program that we're looking into as part of a New Hampshire Resilient Homes program or New Hampshire Safer Homes program, which is going to hopefully come to fruition sometime in the next year or so. Well, we're not there yet. That's going to take some legislative planning and some execution on the department's behalf. But as individual homeowners, there are things that you can do today to protect your own home. What are those things? Think, number one, work with your insurance agent, work with your insurance company to help you identify those risks. More often than not, the company's happy to send an agent out to your house, do an assessment and say, geez, your roof is looking, pretty ragged. Probably had 25 years on it on a 30-year home. You probably need to think about replacing that, because if you do have a loss, it's going to be pretty significant because of the roof deterioration. So there's some opportunities there for possibly replacing a roof or fixing a roof. It could be something as simple as cutting back tree limbs that are approaching your home, if not overhanging your roof, cutting back brush. Cracks in the foundation are a relatively easy fix for homeowners, as far as going to Home Depot and getting some sort of hydraulic caulking that you can use. There are other things that you can do to include making sure your sump pumps work, making sure you have sump pump coverage in your home if you're dealing with the flooding. And chimney flashing is another big one. All these little things that you can do to make your home safer or more resilient, ultimately, if you're working with the right entities, could help you lower your individual coverage. But that's not the answer that we all want to hear. The other thing that you can do is to shop your coverage, as Christian had mentioned. I always like to give the example that, well, number one, we've been telling this to consumers since I joined the department 17 years ago, and I had a new driver in my home probably about 10 years ago. My son was getting his license, and I received the quote on my insurance rates, and I almost gasped when I saw how much my automobile premiums were jumping because I was adding a 16-year-old. So I said, I'm going to take my own advice. I contacted my insurance company, actually contacted the insurance agent that I had used for over 20 years since I had left the Army. And I called up, and it was, I'll be honest with you, it's a great agency. I've used them my entire life, called Allied Insurance Agency out of Bow, New Hampshire. And the response I got back was, Keith, you're with the best company right now. You got the best rates out there. I said, really? Did you shop me as if I was a new customer, a new consumer to my insurance company? And they said, no, we didn't. I said, well, go back, pretend I'm a new insurance consumer, and what are my rates going to be? And they cut off something like $800 to $1,200 off my existing rates with the exact same coverage. And what does that mean? It means there's no longer, how do I say it the right way without sounding too negative? There are no rewards or prizes or bonuses for being loyal to your insurance company. Shop your coverage. It's a consumer's market. We lowered our rates very simply, and I think the only change that we ended up going with is we had our policy actually had a $0, a $500 deductible on our policy, and we increased that to $1,000 or something, or $0 to $250 to $500. It was a minor component that we were able to get that back to where it was and save ourselves $800. So shop that coverage. Probably the most important thing that you can do as a consumer. More importantly, equally important is going through these efforts. You may still find that you don't think what you're hearing is right. You may feel like you're being unfairly discriminated against, that perhaps your neighbor received a rate, house, similar condition that was far less, a lesser magnitude than what you're dealing with. Give us a call at the insurance department. Not everybody has a pen or pencil, but I have a couple of phone numbers that I can share, and certainly direct you to our insurance website, which is behind me, which we have a new one, which is New Hampshire Insurance. I'm sorry, here. New Hampshire.gov/insurance. So please take a flyer. So our consumer services number, for those who do have a pen, 800-852-3416. And as the commissioner mentioned, we have a staff of 7 individuals who range in experience individually anywhere from a couple of years to over 50 years of experience. We have well over 150 years of experience dealing with insurance questions. give us a call. We can answer your question. We can assist you in filing a formal complaint, which allows us to contact the company on your behalf and find answers to your questions if it is about rating. Maybe there was a factor that was overlooked. We had someone here in our insurance department less than a year ago who contacted me and said, I've just been told that my property is going to be non-renewed because the insurance company went to my home and said I have an abandoned car on my property and an appliance. And she goes, that's not my home. So we made a few quick phone calls, and lo and behold, that someone had made a mistake and was looking at the prior file and didn't correct it for the one that was being underwritten. So mistakes do happen, and we can fix those mistakes or assist you in fixing those mistakes. So really what I wanted to mention, shop your coverage, take some responsibility, try to fix your home and address those issues that you're having, and ultimately give us a call if you think we can be of assistance. I want to make sure we have time for questions, but we also wanted to mention flood insurance, which is fundamentally your homeowner's policy does not include coverage for floodwaters. You need to purchase flood insurance. If you live in a flood zone, your bank will require it. If you don't, we highly encourage you to talk to a local agent, independent agent, and find out what it would cost for flood insurance coverage. Commissioner mentioned that we have Joan Peugeot here from the Big I, which is the independent insurance agent of New Hampshire. If you do not know who your current agent is or you're looking for someone, we're not going to tell you who's good and who's bad because there's 250,000 licensed agents in the state of New Hampshire. The independent insurance agents can connect you with somebody within your own zip code, and they can help you, walk you through questions to help make sure you get the coverage that you're looking for. And that phone number, by the way, for the independent insurance agents is 603-224-3965. So on that, I'm going to stop here. Looks like the commissioner has a few words to say, but we also want to get your questions in.
Thank you, Christian and Keith. My staff always loves it when I say this. I'm in no hurry. I'll answer as many questions as you have. Just to emphasize, yes, absolutely shop the coverage. I always know that that's easier said than done. So the best way to leverage that is to work with an independent agent. They've got the full spectrum view of the market. They work with all of the different companies. They can plug you into who can provide you with the coverage that's most suitable for your particular circumstance at a rate that you can afford. I'm not going to throw shade at companies that advertise on television and all of that, but I do remind you at the end of the day what it is you're getting or supposed to be getting from insurance. At the end of the day, what you're supposed to be getting is peace of mind. And I don't know that you get that peace of mind because you saw a really cute mascot with a jingle on television saying that they'd get your quote in 90 seconds or less. Maybe, but I think it's probably a better route to talk to an independent agent who's going to sit down and get to know you, your particular situation, family, what your home is, if you're starting a business or acquiring a business, what types of coverage you're going to need for that. They're going to get to know who you are as a person, and they're going to want to build a long-term relationship with you. So they have that interest to do right by you. And when you need to file a claim, they're going to be your right-hand person on that. To Keith's other point, and we all know these people. I know a lot of them. I'll pick on my parents because it's safer to pick on them than my wife. We all know the people who get their renewal and it's like, my gosh, 25% increase. This is outrageous. Well, did you shop the coverage? Well, but I've been with them for 25 years. Okay, but you ought to see if there's something a little bit more affordable for you, mom and dad, particularly with your fixed income and all. There is no prize for longevity. So take advantage of what's out there that's going to provide you with the coverage that you need to give you that peace of mind, but also is not crushing you financially. And we do have a very robust market. We've got challenges, as we've talked about tonight, but we have over 120-something carriers competing for business. Leverage the benefits of the free market system to your advantage. So All of that being said, hopefully there was more helpful information than boring stuff. Hopefully we always try to hit that balance. But in any event, what do we want to talk about? Yes, sir.
With regards to independent agents, how do you find an independent agent? How do you differentiate them from somebody who's captured? And then what's the standard of care that they need to give you?
So Joan can certainly help you in terms of a directory for an independent agent. Again, my personal opinion, I'd pick somebody locally based so that if I've got to go down and see them, if I got to walk through a complicated document, God forbid I've got a complex claim that I've got to file, I'm, I guess, old-fashioned. I'm the type of guy that likes to talk to somebody on the telephone or talk to them in person rather than using an AI chat bot or something else. So I would pick somebody local. And they're probably, by the way, more familiar with the dynamics in your particular area of the state. So I'd pick somebody here locally on the Seacoast. But again, that's just my opinion. The difference between a captive agent is the captive agent is just going to write for one company. So if you go to a State Farm agent, they'll have that State Farm branding on their storefront or on their business card. And they're only going to give you quotes for what State Farm offers, as opposed to an independent agent that can write for a whole host of different companies. And again, I think that's where the real benefit comes in, because they're going to have a far more diverse view of things. A standard of care, Joan, you can probably talk to them about kind of the ethics that you all set forward for agents, but
Yeah, and there are different standards of care. It really depends on the relationship that you have with your agent. You know, if you're coming first time, you know, the standard of care is probably going to be lower. If you've been with an independent agent for 10 years and your kids went to school together and they know that you have a business, then that standard of care is probably going to be at a higher level. But any independent insurance agent is going to take the time to talk to you about your coverages.
yes, Senator.
So, Christian, question for you. When you were talking about you're just starting to see a stabilization in the auto market, and that the homeowners market is pretty stubborn in its movement right now, what are you seeing for flood insurance policies?
So Christian's from Stratum and the Senator's from Stratum, so there's a little stratum on stratum crime going on here. Go ahead.
But where, there are more and more people
Yeah.
in this area who are now seeking out flood insurance who didn't have to prior, and the flood zones, to the best of my knowledge, I've had some constituents in Exeter who are not technically in the flood zone map, but have experienced significant flooding. And so there's, they're wanting to get in on this, but it's really high. So
Right.
what are you seeing for costs there?
I see very, very few flood rate filings, and that's for two reasons. One is that if the flood insurance is written through the National Flood Insurance Plan, the NFIP, and oftentimes your first step is to go to your homeowner's company and say, hey, I'd like a flood endorsement or a flood coverage, and many companies will write that through the NFIP, which is the federally backed flood insurance plan. Now, if you live in a flood zone, if a designated flood zone, that flood coverage is required most times by your mortgage company, right? And so it's going to be part of your homeowner's policy. They're going to write it through the NFIP. If you're outside of the flood zone, the carrier may or may not write it. They may not want to participate. There's lots of incentives for the insurance company to do it, and so ask them a second time. Hey, you sure you can't write me on the Write Your Own program? Because there's no risk to the insurance carrier. They have to administer the policy. Anyway, more words than necessary. Sorry about that. If you are then going to go out and because there are limitations to the NFIP, it will not cover the full cost to replace your home. There are other limitations. And so if you want to go to the private flood market, one of the concerns, one of the challenges there is that many of the carriers that write on the private flood market are not admitted carriers. They're not regulated by our state to the extent that admitted carriers are. So it's a surplus lines market. And that's one of the things that we're working on, and I'm collaborating with folks in other New England states to get a better handle on the private flood market, to understand it better, to see where the rates are going, to see how the modeling is being conducted right now, to make sure that there are many different, again, these are more words than necessary. It's a young market. We're still learning about it, and we're trying to catch up as best we can. But I think 6 months from now, we'll have better answers for you.
So can I just
Yeah.
that when you said that so we know that if you're within the flood map, right, in the mapping, you are eligible for NFIP. That, we know that. If you are 2 blocks outside the line, we know that those maps are not adjusted in real time.
No, they're not.
Right. And so what people are experiencing here and in other communities on the Seacoast is they're outside the flood line. So they don't qualify necessarily for the NFIP and have been unsuccessful getting into the national program. So do I understand correctly that New Hampshire doesn't have a private flood insurance market to tap into? We have to go out, like how?
There are carriers that will write it.
Yes.
Again,
as
it is expensive, and it might be hard to. It's important to work with an agent, and you kind of have to be somewhat dogged in going after it and going and looking for it. You've had some experience. You've worked with this a little bit too, and there are more carriers than there were a year ago, and we're looking for more. But we want to be careful too, because we need to make sure that these companies are, anyway, well capitalized, that they're going to pay their claims and so forth. Commissioner?
Yeah, no, Senator, to your point, the private market is expensive if you're in a flood zone, which is why the National Flood Insurance Plan program is there. One of the things every year the National Association of Insurance Commissioners flies us, all the commissioners, to Washington to meet with our congressional delegation. I've done it for 3 years. All 3 years I've begged them to please fully fund the NFIP and do it for more than 6 months. Not any individual's fault. It's just Congress isn't working as well as it should these days. That would obviously help some of that, to have some stability in that program. But I will say adamantly, please, even if you're not in a flood zone, get flood coverage, please. The second week I was commissioner, we had that horrific flood last July. And as you may recall, the entire state of Vermont was underwater, and New Hampshire got hit in Cheshire and Sullivan County. And I'm out in Colorado for one of those NEIC conferences, so I'm on mountain time, and I'm getting calls coming into me at 5:30 in the morning from these constituents who have been absolutely devastated. And they are some of the most awful phone calls I've ever received. And I've been involved in public service since I was 19 years old. It's almost over 20 years now. The worst phone calls I've had. People lost everything. And if that were not bad enough, they lost everything and didn't realize that they had absolutely no coverage, because they just assumed that that was going to be covered by their underlying homeowner's insurance policy. No. Senator, to your other point, we've got, I know, the Seacoast area here, but you're all from different towns. If your town is undertaking a major development of any kind, whether that be commercial, residential, whatever it might be, that could potentially change the water management of your community. And so once that project is complete and they can actually go in and assess what the long-term impact of that development is going to be, you got to pressure your local officials to talk to the folks who update those maps to make sure that they are as accurate as they need to be. That's really, really important as well. And I think that spoke to that real-time updating dynamic that you referenced. Yes, sir.
I'd like to get back to something that Chris mentioned towards the beginning. What specific areas of Hampton would be regarded as areas of concern by the insurance companies? And also, what legal basis is there for the insurance companies to discriminate between one Hampton neighborhood and another?
The closer you are to the ocean, the more concerned. I mean, I think that's simply put, that's it. The closer you are to the ocean, the closer you are to where you're going to get hit hardest should there be some sort of a hurricane. And granted, I know by the time anything reaches us, it's typically a tropical storm at that point. But the closer you are to the ocean, the more of a concern there's going to be. In terms of what differentiates one neighborhood over the other, again, it goes back to the specific underwriting criteria that they have and how one particular neighborhood might hit those metrics in a different way than a different neighborhood. It has to go through that approved criteria. They can't just do it because they like people who have white houses versus people who have blue ones. There has to be some basis behind it. Does that answer your question fully?
I think so.
Okay. Yes.
I'm wondering if you can talk a little bit more broadly, specifically about how communities may encourage or permit actions that would improve resilience or lower premiums, make insurance easier to get, recovery more simple. And I'm asking this question as the Hampton Planning Board starts looking at zoning updates and possibly permitting things like elevation of structures closer to the beach, where they're not just watching out for storms, they're also watching out for tides and a general sea level rise situation.
Well, it's a great question. In addition to my day job, being commissioner of the department, I'm also a town councilor in my town. I think about that stuff a lot. And again, I talked about the developments and when you have those developments, how that's going to impact things. The first month that I moved into my new neighborhood, we had a microburst. Huge damage. I mean, it was nuts. It was an 8-minute storm and caused unbelievable damage. And what that instilled in me was an awareness that we've got to stay on top of things like clearing those branches away, the ones that the town is responsible for, clearing them away from the lines, clearing them away from the homes so that they don't become a hazard. Every town is different. Obviously, every town's budget is different. Whether you can offer incentives for certain things, that's going to be a decision for your local elected officials and ultimately voters, depending on your particular form of government, to decide what resources they want to make available to residents to help with that resiliency factor. Beyond that, I don't know. Does that kind of answer your question?
Is there
You guys have something better?
source that would help us understand what goes into the underwriting?
Sure. Oh, yeah. No, these guys are smarter than I am. They'll give you a better answer.
Yeah, there's two pieces to that. When I think of, underwriting has kind of two stages to it. There's the underwriting about whether or not the insurance company is going to take you on as a policyholder, And when it comes to homeowners, reasons that they might not tend to do with, extreme risks to the home. Like, for example, you have a door and there are no stairs outside the door. That the chance, if something's missing from your home, they're not going to write you. You have significant damage to your roof that, anytime it rains, your home's going to flood. Things like that, they're not going to write. Some insurance carriers will say like, because of fire hazard, we're not going to write, log homes, or things like that. Then the second tier is to say, okay, we're agreeing to write this policy, then we need to go and price it. And so there are lots of different characteristics that will go into, and that's where location is perfectly acceptable. Like, where your home is, where the town is, how far you are from a fire department, whether or not you have fire hydrants outside your home, or whether you rely on a wet pipe or a dry pipe. That's going to affect the cost of the insurance. Other criteria will be, the materials that build the house, how many floors there are, of course, the square footage of the home, the age of the roof, all sorts of things are going to go into it. Plus, your prior claims experience is going to go in. If there has been, usually in the last 3 years, some companies will go back 5 years. If there have been claims in the recent past, then that's going to increase the cost of insurance. Is that the kinds of things you were looking to ask? The other thing I would mention in the previous question, if you don't mind, Commissioner, is that we're working on this mitigation program. And I wouldn't be surprised, and forgive me if I'm talking out of turn, but once we develop those criteria and those standards, and we're going to be working with, the building codes, commissioner who oversees the statewide building codes. But once we develop kind of those mitigation standards, and we've worked with carriers that agree, hey, if these things are improved, then there's going to be follow-up discounts. I think it would be reasonable to then work with the municipalities, with the towns, and say, hey, these are the things that are going to help your homes. And
Can you share a draft?
What's that?
Can you share a draft?
When it's available.
Oh my, yes. I mean, we're very, very early stages of this process. In fact, we have Brian Powell, who's the guy that developed the program in Alabama. He now works for the National Association of Insurance Commissioners, and he's coming out in a couple of weeks to kind of help us kind of get started, kind of learn from some of the, steps that he took and some of the mistakes that they made in Alabama, so that we can kind of jump ahead a little bit.
So, something you just said reminded me of a conversation I had with someone last week, and I want to see if this is in fact true. This is a gentleman who lives in a home on the western part of our town. When you get past 95, very few, if any, of the neighborhoods in that area have city water or city sewer, and all of our fire stations and police stations are on the eastern side of 95. And he made a comment in passing that he is paying higher insurance because he doesn't have access to city water, he doesn't have quick access to police and fire. Is that accurate?
So in theory, yes. Now, I'm glad you brought this up because you had mentioned it too. I want to talk just for a second about police and fire, because we've had these incidents come up. So I'll take my town as an example. So I live just on the Salem side of the Salem-Atkinson border. They're all got reciprocal agreements. It doesn't matter what town's name is on the side of the vehicle. If there's a fire and people are in danger, if there's a crime in progress, the closest law enforcement official is going to that scene. And so you've got to be assertive with your insurance company about those facts, about those particular factors. In terms of the water and sewer, I think what they're speaking about there is they're going to have to ensure your septic system, your leach field, your well, and that's obviously a different thing than if you have. I'm sorry?
There's no fire hydrant.
No fire hydrant? No, there's no fire hydrants out there. Whoa.
Yeah,
Wow.
that's a big factor.
Yeah, well, that's
It's a
because
big factor. And
then
what
you
you
got a
just
water
said-
issue there for the fire, for the fire issue. That speaks to the fire issue, yeah, for sure.
One of the things I find interesting in that situation, and for this town, is that they're kind of offsetting risks, right? Because you're kind of further away from any storm or wind damage that might hit you on the coast, but then you run into the problem that, right, I mean, delayed fire response, and they have to bring water to the location, and that becomes, unfortunately, the chances, if there's a real fire, the chances of avoiding a full loss is difficult, and so they have to price that in. Yeah.
Yes, sir.
You said you're going to see an average of about 13% increase. I've had two questions on that. One, what about on the Seacoast? Do you think our average is going to be higher?
That's a very good question. I have not, and I'm not currently able to differentiate by zip code. We're working with NAIC right now to get more data from insurance carriers at the zip code level, and it's currently in the process. We're very close, actually, to getting such data, and which would allow me in the future to do that analysis. But right now, I can't do that.
The other question is, we all just got a new tax assessment.
Oh gosh.
My house went up
Yep.
90%.
Me too.
Oh,
So, what does that mean from an insurance standpoint?
oh, boy.
1%?
Talk to your carrier.
Yeah, well, what it means is that the value of your home, at least on paper, has gone up, and so therefore, the cost to insure it.
But
What's that?
coverage A.
Construction costs don't track property values.
Right.
Right.
So, if I could give you just one point of reference, I talked about my situation. The first quote I got back from my existing carrier was a 39% increase. And when my agent went back and talked to another company, she got a rate that was a 3% increase.
Do you rate carriers?
Do we rate carriers in terms of,
Can you tell me if quality,
no,
so there's no rating system for carriers?
no. That would be tough for us to do. Being their regulator, to start ranking them, I think some folks would start getting a little uncomfortable with that. Yes?
Does the insurance department supply any metrics to consumers?
Metrics in terms of,
What areas of the state might be higher rates, what the average rates are, how many claims were there in Cheshire County versus Sullivan versus Rockingham versus, what?
We can get
You
claims.
have to compile a ton of information.
So there is technology that can certainly tell us number of claims in particular regions. In fact, there's a company out there that's got a software that can take you town by town in terms of the claims. It can do it at the county level. I have not determined yet how accurate it is, but the amounts of those losses. In terms of the premium, I think it's as Christian said, we're at the beginning stages, at least on the homeowner side, of being able to get some of that zip code level data. I don't know why it has taken regulators across this country this long to want to dive into that. There's a little battle between states and the federal government going on there. I try not to get caught up in that stuff. I just want the data that's going to help me best serve the public. So, is that helpful?
Well, I was just curious, if we were to go to the website, what kind of information can we expect?
Yeah, we have a lot of information that I publish about insurance companies and kind of their financial position, kind of like how much premium they've written, what their dollar losses were in aggregate inside the state, where you can look at, you can compare the different carriers. When it comes to claims, we would have to get that information and I'd have to work with it in order to produce that. But I do believe that we work with a couple of statistical agents that collect the data from the insurance carriers themselves and produce it for us. And so we would be able to get that, but it's not currently available. Sorry about that.
What about things like an agent were disciplined or a company were disciplined? Is that available?
Yeah, that's public. Some of that is public.
So yeah, if a company's been disciplined, or if a producer's been disciplined, there is that information on our website. It would be in the form of a consent order, which would say, this is what happened, these are the facts as they've been stipulated to, here was the result.
Where AJ is working on, he's working with a company that's revamping our website, right? So,
You search for enforcement action.
there you go.
Yeah.
Really, there's two components to our website, right? The first and our primary focus is consumer facing, and we have various resources on understanding your policies, understanding what we can help you with and what we can't help you with, because there's some insurances that are regulated by the federal government that we just don't regulate. And you might think, it's counterintuitive, you're the insurance department, why do you not regulate all of them? But, for example, the federally regulated products, we are not statutorily able to have regulatory authority over. But there are a lot of great resources for consumers that we're starting to compile over the last couple of years in terms of frequently asked questions documents, consumer documents on various sort of hot topics like storms, winter weather, moving your kids to college, things to think about in various circumstances or situations you find yourself in life. We also have a really wide variety of topics that we cover on our monthly webinar series, and you can find those on our YouTube page. We've got a lot of helpful information, I think, on our YouTube page. We've actually started to kind of funnel a lot of our consumer-centric stuff to our YouTube because, first of all, it lives forever there, and it's in a great format, I think, for people to digest. So I would really encourage you to go to our website and look for the link to our YouTube channel because you'll find a lot of different kinds of things that may be of interest to you at various times. Some of them are question and answer like this. They're presentations about 15, 20 minutes in length or less. Some are more in depth. One, for example, something I might draw your attention to is we hosted a forum, I guess you'd call it, a few months ago, or I can't remember.
Symposium, yeah.
Yeah, the symposium.
Oh, was that March?
Maybe you've seen it. We tried to direct particularly legislators' attention to it. But we had a gentleman come out and do a whole presentation on, what the heck is going on from a price perspective. Why are these increases happening? What are the cost drivers behind the scenes? He talked a lot about reinsurance. Christian mentioned that. So you can find both, very short, informative content there and a lot longer in-depth stuff there. I guess the second part of our website is more focused on the companies and the things that they need to do to interact with us to do business. But there are certainly a wide variety of consumer resources there of all different kinds, whether you're talking about property and casualty or life and health. And AJ has done a really great job over the last number of months as we transitioned to our new website. It was very outdated, and it was a long time coming that we had a new website, but we just launched that. So we're happy for you to take a look at that. We're happy for your feedback because one of the benefits from our perspective is that it's a lot easier now for us to manage our own website. And so if you have any feedback when you look at our website, hey, where do I find this? Or I saw this thing that wasn't very easy for me to find. Please tell us that and make it easier for us to help other folks. But there's a wide variety of consumer-focused resources there. Just spend a few minutes poking around. I think that the new layout will lend itself to you finding things easier, certainly easier than before. But I would definitely tell you to check out our YouTube page because we have a lot of different kinds of resources there. Everything from, like I said, 20-minute webinars on various topics to, really in-depth, like we call it a symposium, and it really was. Really in-depth presentations from experts in the field. So, yeah.
So I'm getting the 2-minute warning, but I'm gonna hang around afterwards. So I'll leave you just with this. First of all, I'm really heartened by the number of folks who have come out tonight on a Tuesday night to talk insurance. I love my job. I find the work that we do fascinating. This is never going to be real sexy. Let's just be honest. But it's important. But I'm heartened because, as Andrew mentioned, we've really tried hard to put resources out there that are comprehensible to people. People know two things generally about insurance. They pay the premiums. They definitely know that. And the policy is with the rest of the important papers in the sock drawer, the safe, up in the closet someplace, and they hope they never have to look at it. And then the unfortunate thing happens and you've got to file a claim and now you're under stress. We don't like to think about what might happen if something bad were to happen to us, and then it does, and we're under all sorts of emotional stress, and now you're trying to wade through a very complex document for the first time. It's really, really difficult. So the fact that you all want to come out and learn more about this, increase your insurance literacy, as I like to call it, is really encouraging to me. This is time for us unbelievably well spent. The other thing that I would mention as well is please use our consumer division. That is what they're there for. There is no such thing as a stupid question. Your teachers taught you that way, way back then. That is a timeless lesson. No stupid questions. Our folks will answer whatever question you might have or direct you to the individual who can best help. We have 87 employees at our department. Each and every one of them is a bona fide expert in some aspect of insurance. There is someone in our building that can answer whatever question you have. And if not, we will get you in contact with the individual who can answer that question. Last point, again related to consumer. If something seems outrageous, it probably is. I heard the story not that long ago of a consumer who said, I just got a new homeowner's policy and they sent me a letter canceling my policy. And when I called to ask why, they said, well, when we issued the policy and did the underwriting, you didn't tell us that you had a dog. Well, the dog was actually the homeowner's parents' dog. They came to visit and brought the dog, and they took a fine, probably Christmas card photo in front of their home with the family. And respectfully, like some creeper from the insurance company went on their Facebook and saw the dog and got their policy canceled. I mean, it was like, what is going on here? So again, it doesn't have to be quite that outrageous, but if something doesn't seem right to you, call our consumer division. We need to know about that. I can't stress enough. A lot of what drives what we do and the things that we look into, the issues that we emphasize, the things that drive forums like this are the things that come into us from consumers. What's actually happening in real life. You know, there are limitations to just hanging out all day within the four walls of the insurance department. And we can theorize what is going on out there and what is impacting you, but to hear it directly from you and to get the details and understand the nuances of what you're experiencing, it's invaluable. It's really, really invaluable. So thank you all so very much. I hope this was helpful.